Yes, we are live. Hello, everyone, and welcome to our webinar. My name is Olena Grinyuk. I'm the CE Director at the SME Banking Club, and I will be your host today. And today we will discuss how financial institutions can improve fraud risk controls to proactively defend against emerging fraud threats. And we will share insights from a recently published report by LexisNexis Risk Solutions on the global state of fraud and emerging trends seen across Europe and other regions. And I'm joined today by Amit Patel, Fraud and Identity Senior Solutions Consultant at LexisNexis Risk Solutions. Amit, welcome.
Thank you, Elena.
And before we go to the topic, let me very shortly mention organizational information. So we plan our webinar for 45 minutes. We are recording the webinar, so right after we finish, you will receive the link to the video. And also we would like to have this webinar interactive, and you are very welcome to type your questions in the chat whenever you have them, and I will be reading them and we will be answering them during our session. And yes, today we will have the webinar divided, I would say, into several subtopics, and after each of them we will have a Q&A session. So please type your questions, and we will answer all of them. And yes, let's get to our topic. Yes, I have read your report, Amit, and yeah, of course, we will share it after the webinar with all the attendees. And I must say that report paints a worrying picture. So let us discuss how actually we shall respond to keep the digital world safe, I would say. And yeah, Amit, over to you.
No, absolutely. Just can you hear me properly, first of all? Can you see me? All
Yes.
okay? Great. Well, first of all, look, good afternoon to our audience, and thank you once again for joining this webinar. Fraud continues to rise across the world, putting a lot of pressure on number of financial institutions of all types and sizes in order to continuously adopt what we call is the new fraud strategies to best defend this fraud. And this webinar is very kind of specific to helping you to understand what are the key trends in 2026 that we as a LexisNexis are seeing, and what are the strategies you can adopt in order to enhance your fraud risk controls and so on. Okay. But before we kind of do that, a short intro on our LexisNexis risk solution. We are a global kind of trusted provider of data-driven risk and analytics solutions. We serve customers from kind of multiple industries, and we are part of a much bigger group called a RELX group that offers risk, legal, scientific, analytical solutions, which is helping thousands of organizations to make more confident analytical decisions at a global scale. We are part of a listed company, so again, a RELX group, it's part of a stock market. This increases of responsibility as an organization in the global markets that we serve today. Given our global presence, we offer broad coverage across multiple industries. Our solutions are mature and used by a number of top banks, financial institutions of all types and sizes, e-commerce marketplace service, gaming operators, bringing years of experience and data and analytics in fighting against economic crime and also helping you to meet compliance. So hopefully you now know a bit more about who we are, market we serve. Now let's go into the webinar and go through what are the key or the hot trends in fraud in 2026 and beyond, and what kind of strategies you can adopt in order to continuously fight against these new fraud attacks. So really across the globe, organization continues to lose billions in fraud, right? First in the list is first party fraud, estimated somewhere around 4 billion in fraud losses by 2028, right? AI seems to dominate in every fraud attack. I think it's the new norm. We have seen off-the-shelf AI-based tools easily available, designed for obviously the genuine use, but are exploited by the fraudster in carrying out various different types of attacks involving deepfakes, use of synthetic identities, and AI-related fraud is costing industry somewhere around 23 billion or so, our report finds. We are also seeing a huge shift in our consumers adopting more kind of a digital payment methods such as digital wallets. On one hand, it has increased the convenience of our consumers. On other hand, financial institutions struggle to manage the risk associated with this digital payments boom, we call it. On the money mule side, FIs or a lot of the banks are kind of increasing their controls and they are discovering there are a number of accounts that are showing money mule related behavior. And it's just mules always existed across different banks. It's just they remain undetected until now. Our research shows an average of 15 mules per network across 3 to 4 banks, and this could be even bigger depending on the size of the organization and complexity of that organization. Our biggest ever find was over 500 mules in one network operating across multiple financial institutions, moving over 130 million or so in just that one network. More to come later on in the presentation. And believe it or not, carrying out the fraud attacks nowadays has gone so convenient now. This is because fraud also offers its own marketplace, fraud as a service. Some of you may have heard about this. Of course, these are exploited by the bad actors, the fraudsters. Apparently, there are nearly 5 million users or so on a daily basis using this service for a wrong use, right? So let's go through each of these trends in more detail, understand what's the cause behind these trends, why is the fraud rising, and how can we adopt new strategies to prevent against these emerging fraud threats. So first in the list is first-party fraud. Our report highlights it's on the rise across all regions and also across industries. 36% of the fraud reported is related to the first-party fraud. This is 50% increase in year versus the year before, right? And if we talk about EMEA has seen a 51% increase over 18% that was last year. So really by 2028, losses in relation to first-party fraud will reach nearly 5 billion or so. And on the right-hand side, our analysis kind of finds there are top four kind of fraud types within the first-party. Identity misuse. Here, genuine customers are using their own identity to carry out attacks such as multi-accounting fraud. Next in the line is payment abuse. Here we have payment abuse. Here we have a number of customers who are making kind of false chargeback and returns claims, right? Our findings in report also shows that the payment abuse related fraud is going to rise by 15% or more, or contributing to 15% or more towards the actual fraud. And it's going to cost industry over 100 billion a year or so. In response to this, we have seen kind of bold moves from card scheme providers such as Visa introducing something called Visa Acquirer Monitoring Program, where they combine both fraud and dispute under one umbrella. And this is really in response to the rising chargeback claim the card scheme providers are also seeing, which means they are shifting the responsibilities more towards the merchants and the PSPs in order for them to do a lot more in terms of that fraud prevention and detection side. And really, the last two around credit abuse is connected to identity issues. We are seeing bad actors here using the identities to create accounts. They're building a profile where they are showing lots of incoming, outgoing, and at certain time they are then using that trust to apply for much more bigger landing loan, personal loans, and then defaulting on those accounts. And lastly, mule. Especially kind of a rise in money mule especially the rise in recruited mules and so. Okay. Any questions, Olena, so far from the audience?
Not yet, but yes, we invite the attendees to type your questions in the chat. And yeah, within several minutes, I'd say we are ready to answer the first bunch of questions, right? I mean,
no problem.
I do have mine, so no worries.
Okay, great. Cool. So let's continue. We heard about first party is on rise across those four kind of different types of first party fraud. And there are a number of kind of reasons why the first party fraud is on rise, right? The first one that comes to mind is central financial pressure, right? Given the status of economy, due to the ongoing geopolitical situation, it has had real impact on a number of us. So in fact, all of us, right? As a result, some of our customers are turning into the bad customers or falling into what we call is traps of wrongdoing. Bad actors are seeing this as a fair approach, meaning they try to reclaim, they think, what they own from the world. Secondly, many FIs prioritize usually two KPIs. One is the revenue growth. The second is the customer experience. Hence, often, I personally see the risk controls are lowered as a result, especially from the fraud perspective, making it easier for the bad actors to get onboarded. And lastly, I see FI struggle to keep up with modernizing the fraud detection tools, right? Many still use outdated risk mitigation tools and practices. 2 weeks ago, I was in Italy seeing a few financial institutions, including one fintech. I was quite surprised. One of the fintechs said they use Power BI as one of their kind of reporting dashboarding tool in order to analyze merchant-based transactions. And the same tool is also used to write also the rules based on some suspicious transactions they see on the Power BI tool. Again, a little bit surprised on how they're using it, more for me to find out and help them to understand what automated real-time fraud detection can do. But there might be other financial institutions who might be also adopting such practices or may have got those outdated tools which are not effective and built for emerging fraud trends that we are seeing nowadays using AIs, the deepfakes, synthetic identities, and so on. So how do we prevent first-party fraud? I think it starts with, first of all, understanding customers' behavior. Each time your customer makes payment, they go to a branch, pays for something online, buys the goods from marketplace, etc., they're leaving some kind of a footprint over these channels. So invest in a fraud prevention solution that focuses more on the cross journey and the cross behavioral kind of analytics. Utilize additional context is something related to using and collecting device behavioral, location, IP, etc. types of intelligence in a more like a non-intrusive way without impacting your customers and also the experience across the channels. And when this data is collected, we're talking about billions of data here. So it's not just about collecting this intelligence, but also how do we make sense of these data, right? By using mature fraud analytics tool that can help you to find a needle in the haystack, for example, right? Lastly, the risk-based strategy is more focused on ensuring that your fraud strategies are continuously evolve. Fraud evolves or continuously evolves over time. Controls in place today may not be effective for tomorrow. And really, by implementing such strategies combined with using AI-based holistic fraud solution, something that LexisNexis offers, we are more focused on cross-journey, cross-channel, and behavioral analytics. So many businesses have seen real impact in catching more fraud precisely and resulted in savings of millions in terms of fraud prevention side.
Yeah, I actually wanted to ask you, Amit, what to do with that, because actually this is very sad statistics, I would say, and that this is also increasing year by year, that customers are cheating on financial organizations, probably not only financial organizations. So yeah, so like we kind of think that we know the customer, right? Because everybody pass through the process of KYC and KYB, but this is probably not enough, right? So that it should be done real time or
Exactly. And it is quite shocking to see, but I think key is here to also understand the impact these customers are having due to the situation in the world, right? Right now, something is always going on. We're waiting for Trump to wake up tomorrow and really see what's new that's going to come out. It might be something new in the morning, something might change in the evening, and really the impact is on the market, right? Means you've seen the increase in prices across the food, the retailers, the petrol prices, and so on. So you are right that it is shocking, and this is really what drives the behaviors of those genuine customers turning bad. But luckily, there are tools, the fraud detection tools available. Like I mentioned earlier, how can we use that additional context and also the cross-journey, cross-channel behaviors in order to see, is this behavior in line with expected customers' behavior, or how their behavior has changed over time based on understanding the profiles of these customers and so on.
Mhm.
But there is a lot more to come a bit later on in the presentation that we can go through.
If I may, also one more very short question. Do you have any explanation why we see the biggest increase in the EMEA region? Yeah, so in Europe and Middle East. So why is that? Is there any, because in terms of the generations, the slide that you showed, I think this is kind of understandable that this comes mainly from millennials and Generation Z because they are more digitally fluent, let's say. But in terms of the regions, do you have any explanation why we see actually in our region a big increase?
Yeah, I think a couple of reasons. I think earlier I mentioned 51% over 18% last year. That's the nearly threefold increase. The reasons are really, I think, personally from my perspective, we as an EMEA, European region or EU region, very much dependent on Eastern and Western part of the world, right? Which means we are sitting right in the middle of the two regions, which is US and APAC, and we are the worst who are impacted as a result, given we do too so much import from other countries, and these countries are now fighting against each other, and hence we are seeing that impact on us. But I would say that geopolitical situation is currently playing a crucial role, number one, and that's really driving behaviors of our customers, consumers in Europe itself.
Mm-hmm. All right. Let's move forward. Thank you.
Cool. All right. So next trend is really around the AI being used it's kind of AI is a normal kind of new norm in the fraud attacks, and our report kind of clearly highlights AI being used at a large scale in creation of deepfakes. 1 in 20 attacks involve using deepfakes. 85% of the FIs that we consulted also reported generative AI fraud as a growing threat to many organizations. It's going to cost industry billions by 2020 or so. And below is a real insight from the data that we have within our digital identity network, a chart that shows human versus AI or bot-related attack compared across 2 years. The line in the red is 2025, and the red line clearly shows a spike in AI or bot-related attack across few months compared to 2024, right? And there are many other examples. The three that came to my mind when I was doing some preparation for this webinar. The first one is around, an audience may have heard about this, an AI-based company called Anthropic. They have agentic AI platform called Claude, and Claude agentic AI was used by North Korean cyber criminals in 2024 in targeted attacks involving a number of financial institutions, global organizations, also government bodies. It was used to an extent where agentic AI helped them to also filter the right data that they need to steal from this organization. And in other cases, we have a Ferrari CEO who was targeted by kind of a deep fake. His deep fake was created and sent to one of his executives. Luckily, Ferrari was able to identify this deep fake in time and didn't suffer any kind of losses. And lastly, we have heard there are many scams that involves impersonation of famous celebrities, and it results in scamming millions from victims or so on. So AI is a big threat in the world. Now, other things is really, AI has kind of also rewritten the fraud attack timeline, meaning nowadays you can easily create deepfakes using off-the-shelf tools. These tools are designed for the right or the legitimate use, but are being exploited by the fraudster. If I go back a few years, I did a lab experiment to create my own deepfake, talking about something called space exploration. I came across two off-the-shelf tools. Audience may have heard about this. One is the Deepface Lab, and another one is Face Swap. I fed these tools with my recordings, some video clips, my own pictures. I create a prompt for AI to create my own kind of deepfakes that talks about space exploration, right? Me talking about space exploration. Wow. So this tells you, that you don't need to be an AI expert, right? In terms of creating these deepfakes, creating those sophisticated fraud attacks. These tools automate from everything, such as sourcing the data, testing the actual deepfakes, targeting the attack. And this is really why the fraudsters and cyber criminals are carrying out such attacks at a mass scale in minutes or so. So really, how do we what do we do in order to fight against this bad AI? So from what I see, it's kind of a battlefield between a good and a bad AI. What do we mean by good AI? Firstly, it's about a good AI character. Good AI should be explainable, regulatory aligned, and industry specific. Okay, what do we mean by explainable is really about AI should be able to explain the decision it made. Is not just about what was the decision. Regulatory aligned means there should be a full governance behind how AI was built, how did it address the data privacy concern, and the last one, industry specific, is very much focused on training the AI with industry specific data, feature sets, and not just using a generic AI to fight the fraud. Okay. The next one is really about good AI should be more autonomous. Fraud continuously evolves, so should the good AI. It should have a mechanism or capabilities to self-learn, identify the new strategies. Why don't we call this such as AI-based smart learning, right? Something that our LexisNexis solution offers as a standard capability. Third is AI. A good AI is hungry, right? And because good AI is continuously kind of fighting the bad AI. So it's hungry, and what I mean here is feed the AI with the right data, additional context such as behavioral, to increase its accuracy in predicting the fraud. For example, having just a payment data, device location is not enough. Cross-journey behavioral data is also important, and this can be done by monitoring the performance of the model as well. Okay, so really, it's always it's a battlefield between good AI and bad AI, and these are really the 5 kind of core characteristics of good AI and how it should fight the bad AI.
Yes,
Probably
only one question here. If it is so simple, it seems to be that this is very simple to build your own, let's say, bad AI agent or agents, let's say, and proceed with such kind of attacks. So what does it mean? Does it mean that we should then fight with good AI agents or with bad AI agents as well? Like what to do? Because this is more scalable, I think, like, I don't know, day by day. So most probably tomorrow it will be easier than it is today. Like what should be done here? Because it's really scary. It means that actually humans will not be able to fight that. You should have also probably AI agents to fight that, right?
No, 100% means it's the good AI, and this is, I think, what I mean by that continuous evolution of the good AI. Why does it need, why the good AI is hungry in terms of not just having one specific type of data, but adding, cross-journey, cross-channel behavior analytics also helps the AI to make a lot more precise decision in terms of calling this behavior as a fraudulent behavior compared to a genuine behavior. So I think your question really regarding what do we do in terms of good AI? It all lies within, I think, financial institution using kind of mature kind of fraud tools. A lot of FIs or institutions may have data science teams. Certainly from LexisNexis, for example, we don't stop them using their own tools. They can use LexisNexis solution as a complementary to their own AI-based practice. I think earlier I mentioned also this autonomous, meaning this smart learning capability. Again, it speeds up the actual training of the AI, of the good AI, but also it helps the many SMB organization who does not have those skill sets, who does not have those resources to train and test or create new models. It gives them an ability to automate those building of the models with full explainability, the governance behind it as well.
Yeah, thank you, Amit.
All right, so let's continue in terms of the next kind of trend on the list is very much around the money mules. It's a hot topic across the banking industry. Every bank, FI, including fintechs, has a money mule problem, a growing mule problem in their organization. Organized mule networks have been outpacing fraud teams over a number of years, right? And we all know the mules operate at a scale, a big scale. Earlier, I kind of highlighted our network and consortium intelligence discovered over 500 mules or so, shifting over 130 million across different financial institutions, right? So given the money involved and how the networks can quickly disperse this using a mule network, in some regions, the regulators has come together. And in Australia, for example, they are imposing some fines and limit in investing in crypto. I think we all know that all of those illicit funds, or most of the illicit funds, are invested on crypto platforms, given it's a decentralized, right? On UK introduced 50-50 liability shift a few years ago. In APAC, they're more focused on cross-industry collaboration, educating the customer. So they are much more action-orientated in terms of the change they are bringing in order to fight against these money mules. And this is all because mule is a minutes game, right? When it comes to moving that money within the mule network, it's a minute game. And the snapshot that you see on the left from a report clearly shows how stolen funds from two separate real scam victims in two different banks, Bank A and B, were funneled through a mule network involving three banks, Bank C, D, and E, right? So within that 30 minutes, two victims, two different banks, three other banks, and two different industries where this money mule got dispersed, right? And shocking how the money can be moved so quickly within the mule network. Mules fall under kind of three categories: recruited, exploited, and complicit. Personally, based on my consultation with many financial institutions, those fintechs, and also customers from other industry, a lot of the muling problem is that many organizations face is around recruited and complicit mules. They're both on rise, and they operate on a multi-layered fraud network scheme that cost organization billions in terms of fraud losses. Okay. So really, how do we kind of fight against such mules? I guess given the sophistication and that multi-layered fraud schemes by the mules, fraud strategies need to move beyond the payments monitoring. Let's say 3D-based strategy: detect, disrupt, and dismantle. And all begins with knowing type of mule and their behaviors. Let's take an example. Recruited mules are dormant for weeks or months, right? Until they're about to receive funds, or they get instructions from a mule herder that they're about to receive some funds. They need to send these funds across multiple beneficiaries across these banks and so on. And in this case, you will see a sudden spike in events and activities in recruited mules' behavior on their login accounts, right? In one case of a LexisNexis fraud solution, mule model detected a recruited mule behavior highlighting 106 events in 2 days. And these were a combination of login events, payment events, creating of new beneficiaries, and so on. And if we compare the 106 events across 2 days of the same recruited mule, based on their baseline profile, they only did 71 events in 6 months, right? So again, 106 events in 2 days versus a baseline showing 71 events in 6 months. That kind of clearly shows the behavior of this recruited mule, how it changes based on when they're about to receive money and the instruction they get from those mule herders also, okay? Additional in the strategy should also be utilizing additional data such as behavioral and journey kind of specific data to catch such mule. In one case, using additional context, LexisNexis delivered a kind of 50% uplift in the mule detection. Secondly, the mule strategy should also cover detection of this mule across all the journeys. And lastly, to disrupt the mule networks, FIs should join all the forces, join the forces across different regions and industry in order to provide the value through in order to ensure that they are sharing the intelligence between them. And this is all about collaboration in order to break the mill rings.
Mm-hmm. We have one comment to the previous part, to the previous subtopic about bad AI frauds. I would like to read it just to everybody, and you, Amit, also know it. We have a comment from Agnieszka, and thank you very much for that, that in Poland, BLIK fraudsters, BLIK is the way of payments where you can pay with, let's say, one-time code. So either you can make payments or so its payment goes to your telephone number. Also, you can cash in, cash out from the ATMs. So you need only one code generated in the banking application.
Mm-hmm.
And then, so for these payments, sometimes fraudsters are as young as 12 years old, which is really shows how accessible and easy to use bad AI. Yes. Okay, we are entering, I think, generation alpha already with that. So yeah, this is shocking. Yeah.
Yeah. Is this just a question, or is it more kind of comment?
This is just a comment on the bad AI frauds, how accessible it is.
Sure. And I think this clearly shows means that I have another trend later in the presentation, kind of what I call is digital payments boom, and that's going to talk about such payment channels where this money can be transferred within seconds, right? And the risk it imposes on financial institution, but I think more commonly, if it's a scam, then we know impact it has on those victims, right? A lasting impact when those money is gone and they cannot be traced anymore as well. So yeah, more to come as well from my side.
Let's continue then.
On the payment scheme. So yeah, the next trend is really around the fraud as a service, so-called the dark web. These are invitation-only kind of marketplaces. Our report highlights there are somewhere around 31 fraud as a service providers in the market, and earlier I highlighted nearly 5 million users who uses fraud as a service on a daily basis, and that generates somewhere around 12 million passive income for many of these cyber criminals who are offering fraud as a service. And for very few euro cents or euros, cyber criminals can source and purchase stolen emails, accounts with good credit history. They are purposefully open. They have been in use for 6 months just to create those profiles, but those accounts are ready for the fraudsters to use in order to carry out and use in their fraud attacks. And let's also not forget those automation right behind the bots, or perhaps also the scripted attacks that fraudsters usually carry out as part of a large-scale mass attacks they do on many financial institutions. As well. I think what shocks me is there are also forums, tutorials, and also blogs where the actual fraudsters can consult another expert or another fellow fraudsters in order to ask them how best to carry out this attack. Or perhaps, I'm stuck here. What can I do further in order to get successful in carrying out this attack? So again, the report obviously has a lot more kind of details behind the fraud as a service on how we found these 31 different types of service providers and so on. So I really recommend using the report as a guidance further. So yeah, putting this into a practice, let's take account takeover as a use case and understand how the dark web resources are used to carry out account takeover attacks. I think typically from a fraudster kind of perspective, they see this as a two-stage fraud attack. Stage one is really about the preparation stage, right? This is where they are very much thinking, who are they going to target, what and where they need to source or gather this data from. I think in the earlier slide I showed you with few euros you can purchase a stolen data from the dark web. I think once sourced, fraudsters carry out some tests in terms of understanding, how valid this data is, how real this data is. But more importantly, I think they are testing the organization's the risk mitigation controls in order to adapt an attack. And at this point, if they consult And if at this point, if they need to consult other fraudsters, other cyber criminals who have done it before, this is really where those forums are being used in order for these fraudsters to learn from these different attacks and really apply those strategies in those fraud attacks and be successful as well, right? And really, the second stage is very much focused on attack. This is where the fraudsters launches with the mass attacks here through some kind of a scamming kind of attack involving phishing scam, phishing scam, or something else. So really, the dark web has always something and somewhat available for these fraudsters to carry out such attacks. Right. So how do we kind of defend against such fraud as a service attacks? I think first of all, fraud is all about prevention. Hence, defensive controls and strategies needs to be put in place to catch fraud early, right? Starting from account opening or onboarding. Organizations or the fraud strategies team also needs to adopt an intelligence-led defense, and this means more context for using fraud, decisioning, and scoring. Fraudsters often rely on both stolen PII data, right, or synthetic data. They use low-tech devices, for example, low-tech mobile devices. We have seen fraudsters sitting behind proxies. So having fraud solution that can profile the customer's devices, those cross-channel, cross-journey kind of analytics, and also the behavior analytics is key in order to adopt an intelligence-led defense and so on. And next is, how do we identify that this fraud attack was carried out as a mass scale involved using fraud as a service type of infrastructure? So think about the fraudster. They are intelligent. Time is money for them. Every failed attempt is more like a missed opportunity for them. They don't want to copy and paste hundreds of data, which means they carry out big scale attack all at once using bot or some kind of script. And here, using AI-based behavior intelligence combined with biometrics is also proven very effective in terms of differentiating between those mass scale attacks involving human versus a bot or AI related attack. Okay, so these are kind of the three major kind of strategies I would personally recommend in terms of how do we defend against those fraud as a service type of attacks.
Can you tell us a little bit more in detail what are the exact tools, let's say, how financial institutions can check such criminals or the data which is provided by their or for their, let's say, loan application or digital onboarding application? What are the exact tools? Like what, because you catch fraud early, how to do that? How like actually to check whether this data was stolen from the darknet or not?
Yeah, great question. So I think many organizations may have what we call is their own kind of compromised list of devices, API data, meaning some emails, some addresses that have been previously involved in some of those loan applications where it was investigated and they were then marked as a fraud, right? So many organizations has, but like I said, there is number of customers out there, the use of that synthetic stolen data by the fraudster. They're doing this multi-accounting kind of schemes where they're using this data to open big accounts. So really to answer your question, Elena, right, means if you have something like a digital identity network, right, something that we offer in terms of LexisNexis, that allows you to cross-check, cross-reference those customers' data, those devices, those emails, etc., that has been previously involved in fraud, right? And again, as our customers, we use this. Again, we got thousands of financial institutions, but also other industries who are also contributing to that digital network, which means we have a database of billions of data points that our customers or our fraud tool can really cross-reference and cross-check how genuine this customer is, we can also use that data to identify any fraud to prevent from that happening. In other cases, the same data is also used to build what we call is trust within your customers, which means if we have seen that customer before with the same device, with the same email address, same mobile, same home address somewhere else in other banks who uses LexisNexis network, all of a sudden that trust element is a higher for those genuine customers, which means you can offer these genuine customers with a high trust, more like a frictionless journey, but engage more risk-based step up for those risky customers where we find some of the data has been previously involved in some kind of a fraud within the bank, outside the bank, or across different industries. Hopefully that answers your question.
Yes, and we have one more question for you.
Yeah, please.
From Agnieszka. One question is about your solutions. Do solutions like LexisNexis Risk Solutions have any access to risk signals from platforms like Meta? For example, behavioral anomalies that could indicate account takeover.
Yeah.
Signals such as sudden changes in communication patterns, mass outreach, or indicators of social pressure would be extremely valuable to better assess user intent before transaction authorization. Curious how you see the feasibility of this kind of cross-platform signal exchange in practice.
Great. Now, thanks, first of all, for asking the question. I think it's a great question. Meta being obviously that virtual platform posing a real threat to a number of us. As I have come across a number of scams on Meta. I think recently there was also in the news that Facebook awarded somewhere around 3 million for many of the victims, I think in the United States, I think about a week or 2 weeks ago as well. But really to answer your question, we don't have I would say, direct integration with Meta. Based on what I know, we can, from a solution perspective, we can certainly take what we call is real-time feeds from third parties. Our solution can also make an outbound, what we call is an API call to those third parties and source the data it needs for the real-time decisioning. Okay, so short answer is we do not have direct integration with Meta, but we have the mechanism in order for us to source that data from really any third parties. And the key thing is that real-time lookup we can do using those APIs, bring the data back and make much more holistic kind of decision on assessing the riskiness of that event or that payment going over such platform.
All right. Thank you.
Yeah. Cool. Thanks. So let's move on. Last trend. So this is really on we're on the kind of final topic. This is on digital payments boom. Digital payments boom trend has created numerous opportunities, right? For example, the challenger kind of neobank banking market will grow in trillions by 2030. Easier for consumers to apply for short-term kind of loans, spread the cost over time. We saw the digital launch of digital currencies such as digital euro or stable coin by UK is kind of actively being thought of or being considered. So while on one hand, the digital payment has brought in a huge opportunities and growth, on other hand, it has created what I call is a numerous kind of opportunities for the fraudsters across the world, right? And billions are being lost in different types of scams that we all are aware of. The money is moved from one place to another in 1 second. I think earlier, like I mentioned, those neural networks, those money gone in 30 minutes, those 2 different victims, 5 different financial institutions involved, and the money went into 2 different platforms such as gaming and a crypto. So we can see a real impact of how the digital payment on one hand is helping the consumers to smoothen the experiences, making those payments anywhere through any channel such as digital wallets. On other hand, it has heightened the risk for many kind of organizations. So how do we protect our consumers of today? And it all so it all starts with kind of building more like a holistic kind of view of customer behaviors. The great thing about digitalization is the medium it uses, right? It's the digital channels such as mobile app, those digital wallets, the web channel, the smart devices, and so on. So by using the fraud tools that specialize in device and behavior profiling, combined with the payment fraud risk monitoring is important for organizations, right? Having ability to automatically maintain persistent digital personas or identity is also crucial. I think earlier I mentioned, how LexisNexis can, uses device. First of all, it collects those device behavioral location, IP network, anyone sitting behind the proxies. All of that can be detected through that profiling mechanism and used in the fraud detection to make much more precise decision on why this event or this journey is risky compared to others, right? So that's kind of how we can protect the digital customers of today. If I kind of put all of this into the practice, such as use of cross-channel shared intelligence and digital identity network, you can clearly see the benefit one of our customers has achieved, right? They saw a double-digit uplift in fraud detection in all cases. With just CNP data alone, the card not present journey, they were having somewhere around 42% as a detection rate. As soon as they added the digital identity network signal, that jumped to 10%. So I think, Elena, you asked the question around how can we quickly catch this fraud early, as part of the fraud as a service attack. So that one answer is having that shared intelligence, having that data available in hand to cross-reference and cross-check is important. And with additional kind of cross-channel, cross-journey data, you can see a clear uplift in also detection to more like a 75% or so. And many financial institutions who uses LexisNexis solution, we have provided a double-digit kind of detection rate. And I think the key thing here is also we help them prevent a huge amount of fraud from a losses perspective. And the last point is really of a digital kind of identity network footprint. It's continuously growing. Earlier I mentioned how this digital identity network is used to do that cross references, cross checking of the identities we have seen before, not seen before, those stolen devices that has been marked by other customers, how the data can be used to for trust-based signals or risk-based signals. So again, our network is one of the largest, is mature, and it's also growing year on year over 20% or so. And this is really how we are helping a number of financial institutions in terms of preventing those fraud and optimizing their fraud strategies. So we hope the webinar was informative, interesting. I would welcome the last few questions. Otherwise, pass it over to you, Elena, for closing.
Yes, thank you very much, Amit. I think that's, we can wrap up. We don't have any questions from the audience. And probably my last question to you to wrap up will be, what exactly financial institutions should do right now to stay safe in their digital channels? What is the number one and number two and number three step to do right now, today, after the webinar?
So I think I would say, look, first of all, I think I would encourage audience to read the report. It's kind of an eye opener, because when you see those trends in detail, understand the strategies we have outlined in that report, you would see reason why we need to act quickly. Secondly, it's all about getting some direction from individuals like me. I'm happy to connect. I think for me is more about let me understand what does your fraud world look like, where are the open risk, and then let me help you to understand where and how different strategies can help to prevent fraud. So yeah, it's very much just going back and seeing based on the key trends in 2026 and beyond, how much of my fraud strategies are in place in order to prevent those fraud, and also that the report and consultation, right? It's a free consultation. Reach out to me via LinkedIn or somewhere else, and happy to talk you through in a lot more detail about many things.
Yeah, thank you. Thank you very much, Amit. And thank you very much to all the participants. And yeah, we will share, of course, the recording and the reports. And yes, you're welcome to contact afterwards with any questions that you can have. So thank you very much and see you next time. Goodbye.